Are we just one tweet away from another bull market? Hold on, not so fast. We got China, we got Iran, we got earnings, we got GDP. Lots to talk about. Sit back, let's get started. This is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you find this video of value and are looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So today's agenda, we got the big charts, going to give our signals, talk a little bit about Treasuries, what keeps me up at night, and what's on my radar going forward. Let's go to the big charts. First up, we got our daily chart. What do we see here? Lots of things. Number one, momentum, negative crossover, not surprising with what's going on right now. Number two is volatility, up to 17. We've talked about this. We've been snuggling on that 15 line. Above 15, you got to be cautious. From there, how about up top? 1, 2, 3. Classic head and shoulders setting up there. And we've had two levels of what I'll call resistance. Okay, we broke through one, broke through another yesterday. But guess what? Got a tweet. What happens? Market goes up. That's why we're up about 0.6. Recording this on Wednesday about midday. So right now, clearly our short-term signal, I'm still neutral with real close to going negative. So next, what do we have? We're going to go to the weekly chart. Really not much change here. You can see, same thing. Now, on a weekly chart, it's last week, right? 23. We don't have this week's. But we are going to see that classic head and shoulders pattern. Same thing here. We've been talking about this trend line. We failed at it clearly, and now we're coming down again. So right now, I am neutral on the overall midterm view. Next, we have our monthly view. Any change here? Little bit, okay? So we've got a couple things. First off, momentum is still below the red line, so that puts me in a negative signal as we don't have a lot of those over a long period of time. There is your 12-month moving average. We're real close to it, but we're mid-month, so we have to see what happens, and we're also still very much negative divergence, right, and lower highs. And here we peaked and are going down. So again, long term would be negative. So I'm neutral, real close to negative, neutral, and then negative on the long term, which puts me neutral overall. Now next up, let's take a look at behind the scenes. What's happening? Here, again, we've shown this in the past. The black line is your S&P, okay? And the gray histogram is your new highs minus new lows. Last year, when we hit all-time highs, had a big push. A lot of companies are going up. We talked about this last year, weak, and yet we still hit it. And I've been talking about this all year, right? We're just kind of meandering along, and we hit our all-time highs, and then we're coming down again. So this is another thing that I see behind the scenes that concerns me. The next one is going to be new highs minus low percent. Any change here? Not yet. You're looking for 2 of 3 to be either bullish or bearish, above or below 10, okay? So right now, as you see, we really don't have much going on, although we have turned negative on the small and mids. So I would say another reason why we are neutral. From there, those companies above or below the 200-day moving average, same thing. It's not like a big move, but what we see is rolling over, rolling over, rolling over. Below 40 would be considered bearish, 42.50, and then we still have a bit to go on the overall S&P. Next up, let's talk about Treasuries. Okay, Treasuries. Last time we have talked about this. A couple things about Treasuries you have to understand. There has been a big move for people shorting Treasuries. Sometimes you have to be opposite of the herd to make money. And we talked about this, but for us, we started adding Treasuries back in the fall, okay? And if you recall, I even said last video, I still think we go down to 235, hit 237 yesterday. So this has really been a good move for us overall. Now the next thing, we've talked about this as well, having shown it, here's a quick update. Very interesting, right? On the top here, you have the S&P. Okay, on the bottom line, the black line is going to be over here, is going to be your Treasuries. Okay, generally they're correlated. Now here, as the bond market was going down, we continue to see the S&P go up. It's unusual because they always say the bond market's smarter and they understand what's going on the market. Now all of a sudden, this shows correlation. If you have a 1 correlation, it means you move lock and step, right? So we weren't correlated, and now we're getting really correlated. So the bond market continues to go down, and the stock market is, in fact, starting to follow. So, again, very interesting. Next up, what keeps me up at night? First up, our president, of course, tweet after tweet after tweet, moving the markets, not just daily, but it seems every hour on the hour, right? Here's last week. Trump says China premier coming to U.S. to make a deal. Trump says tariffs on $200 billion of Chinese goods. And then he comes up and, of course, says there's no deal. China is making a mistake. So you have to be careful. Right now, when I say neutral, it's not a time to make a lot of moves, especially if you're a long-term investor. You have to be careful with these daily moves. Now, speaking of China, what's happening here is a couple things. They need a deal more than we do. That's a fact. Why? You see China, they went down, they came back up, and then you had a big rush. We're down about 15% from our high over here, and then this morning they came out with some more negative data. They are definitively slowing. Here shows what China uses as far as commodities. One of the things, the big things we look for is copper, right? That's how they're building a lot of their infrastructure over there. And look at copper. Boom. Hit a high and then worked its way down again. So, slowing in China, I've said it before, I've been saying it for months and months. They're not going to make a deal. They are too proud. They are against U.S. They are not going to allow Trump to win. I don't see it happening. I think this continues on for quite some time. Now, what else? Well, how bad is the market right now? We got a burger company that doesn't actually make burgers that went up 178% in the last week of trading. Yikes.
More beef than the Big Mac or Whopper.
We've got the owner.
Hello? Where's the beef?
How about taxis? Taxis, we got a couple taxi companies that don't own any vehicles, don't have any employees. One of them, when they went public, has an $80 billion, that is a B, billion-dollar market cap. Next up, we talk about the market melt-up in our last video. What is one of the biggest signs? At the end of it, the individual investor jumps in, and boy, did they go all in at the end of April. The dumb money goes in always late, a good sign. U.S. household personal interest payments. Hello, how about that trend line? That trend is not your friend. We're back at levels before the last crash, and some of the others really got to continue to watch that. People are just over leveraged. ISM number, manufacturing. Talk about trends. High, lower high, lower high, lower high, and you got it, lower high. We're at a 52, okay? We're up in the 58 range, 60 range. We're down to 52. Below 50 means contraction. Earnings, been talking about this forever. Not a lot of people have listened. 451 companies reported through yesterday. Earnings growth, 1.70%. That is not a typo. 4.78% growth. So we've gone from 24 to 12 to less than 2 on earnings growth. Big problem. Hot off the presses, GDP. Latest forecast as of today, 1.1 for quarter number 2. Last video I talked about the false numbers they gave us at the end of the last quarter. Next up, what's on my radar? As we get into what's on my radar, I want you to remember that asset allocation is not just large, small, mid, and technology companies. Right now, we've talked about how we are in several late cycle sectors, one of those being oil. And if you look at this little pullback, we have fared very well. Now, oil has really gone sideways, okay, since our last video. Kind of moved down, but it's consolidating. You don't see it, I promise. There is a golden cross there, the 50 going above 200. You're at 32 on the volatility with oil right now. So I'd be a little bit patient. We're up 1.2 today, which is nice. But this is one of our top holdings as we continue through this quarter. The next one is communication. We talked about that. I really felt that this was setting up nicely as a bullish flag, right? We had a big run. We came back. I talked about a consolidation in the last video. Then, of course, we had this little blip. And then we're up big today, almost 2%. Next up, this one concerns me, healthcare. It's just not going anywhere. You can see it. And if we had continued on this downtrend this week, this is probably the first sector I'm going to sell. We have had a negative crossover on momentum. Decent update today, but we're just not doing anything. It'll allow me, if I have not made the decision yet, allow me to raise some cash and be patient for other opportunities. REITs, look at that. What a great looking chart. We've talked about this. It did hold up in the last week with all this turmoil. And today you see it again, almost up 1%, which is interesting because the markets are up and all of these late cycle sectors are up as well. Last up, utilities. Just been consolidating, but heck, while it's consolidating, we are collecting that dividend. Now, wrapping things up, fear and greed. We are down to 35, so fear has definitely set into this market, down to 68. Again, our indicators, 2 neutral, 1 very close to going negative, 1 tweet away probably, 1 negative, which really puts us in a neutral stance. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.